Hi, I'm David Busch, Co-Chief Investment Officer with Trajan Wealth. Today I had the opportunity to speak with Diane King Hall on the Schwab Morning Movers. I hope you enjoy.
Welcome back to Morning Movers. I'm Diane King Hall coming to you live from the floor of the New York Stock Exchange. We want to welcome in our next guest. That's David Busch, Co-Chief Investment Officer of Trajan Wealth. David, thank you so much for joining us. We just got some inflation data out that was better than expected. So I want to start with the macroeconomic backdrop because you said this week would be, dictated by the jobs report, by the inflation data. And I think a lot of people thought that this week. The jobs report was better than expected. This inflation data is better than expected. What's your take on how much that matters right now?
Well, good morning, Diane, and happy Friday. Thank you for having me. It's interesting. You're exactly right. We had a better than expected jobs report earlier in the week. And then this morning, we're experiencing cooling inflation, which is really going to be a tailwind across sectors. So we're already seeing a rally in the bond market. So yields are coming down. And I would expect that this will be a huge benefit to risk assets. So I would expect that the equity markets will appreciate this lower inflation number this morning.
Okay, that they will. Right now, the reaction seems pretty muted. We ticked positive, but barely. So we'll see how things progress as the day progresses. It seems like what has really kind of grabbed hold this week is fears about AI disruption. Is that your take?
Yes, we're seeing those fears of AI disruption in terms of the potential automation of jobs, specifically entry-level white-collar jobs. And I think that's got the market a bit concerned. However, what I would caution investors or advise investors is to think about the other sectors that are going to benefit from this AI infrastructure boom. So while we'll see some automation, particularly on the white-collar side of the job market, the blue-collar side should be a boom. So think about the sectors that will benefit from the AI infrastructure build out. So everything from industrials and materials, energy producers, and so on. It's going to continue to cause a broadening of the market.
Okay, so and that's something we've been having a conversation this year about a broadening and also a rotation. You use the term the quality pivot amid data tension. What does that mean? What does that look like in a portfolio?
Yeah, so the way that I view it is that when we think about that broadening, those sectors that are going to benefit are sort of those traditional value tilted dividend payers, and those are going to be the sectors that are going to benefit. So energy producers, utilities, and so on. So when I say quality pivot, it's really a pivot towards value and even a broadening into mid and small cap, which we saw last year and at the beginning of this year.
Let me ask you this. I'm curious to know your thoughts on the SaaS apocalypse. That's the term we've been dubbing, the wreck we've been watching in software stocks. Do you think it's overdone, especially when you think about, the sectors within the sectors being hit, like, for instance, cybersecurity?
Yeah, I think it is a bit overdone because ultimately those software companies, if we think of Salesforce and others, they're also going to be using AI. So it's I understand the concern about cybersecurity, but also these software companies are going to be able to play defense with AI technology as well. So I think it is overblown, and I think that the concerns about massive layoffs, while those sectors could experience layoffs, I think at the end of the day, they're still going to have people in place that understand AI and can use it as a tool to develop the next generation of software and software tools.
And speaking of that, going back to your point about essentially the AI spending boom, right? For those who feel like they missed it, right? They missed the, opportunity that came from investing in the heavyweights within AI. But the heavyweights are still pouring billions into AI infrastructure, building out the data centers. Where do you see opportunity? Is there still opportunity when you think about where it might show up outside of, some of the obvious names?
Yeah, so I'll start with the large cap tech names. So the big four technology companies, they've announced recently in their earnings releases that they're going to spend upwards of $650 billion on AI infrastructure. Now, here's the key, is that we're going to have headline risk due to earnings volatility with these large cap tech names. That's why if we look down to that next layer, who's going to benefit from this AI infrastructure build out? And that's where we're seeing the rally in all these different sectors like industrials, materials, and energy. So that's where I would point investors to look for that opportunity to continue on this AI infrastructure boom.
Let me ask you about one of the heavyweights in particular, if you can comment on this. Microsoft, it's had a really difficult start to this year. It's one of the group that is planning to pour billions into the build out, and they would say it's worth it, obviously. But the market doesn't seem to be receiving that kindly from Microsoft, at least. What's your thought on this one?
Yeah, at the end of the day, Microsoft is so massive and their applications permeate the economy. And as a result, they are going to continue to be, I mean, long-term, as a long-term investor, I think it's going to be fine.
All right, David, we'll leave it there. That's David Busch, Co-Chief Investment Officer of Trajan Wealth. Thank you, David. Have a great long weekend. Appreciate your time.
Thank you for watching. Be sure to like and subscribe for more content just like this.